Man, this thing is just slow. Makes no sense. None. All right, guys. Tech problems with my computer. Pissing me off. All right, so we've got a market that looks like gap down a little bit, but not much. We've got the 10-day down here being supported by that so far. Um, yeah, right. 2 minutes to opening. I got banned on Bitcoin Reddit, so I'm fighting with the administrators right now. All right, sorry guys. Uh, put a new comfort on my bed. It's nice and warm, and I overslept. Market's going to open, but like I said, we got um, down overnight session, but we came back nicely. Ideally, we'll hang out for a bit. I have a new tool that I'm using. If you guys have 8 million tabs open like I do, I'll show it to you in a little bit. It's pretty fun. So market down. MMNFF leading us higher today. Save. Griffles. What's Griffles doing? Nothing. Okay, Griffles isn't doing anything. Quad U. What are you doing? There you go. Not much. Quad U not doing much. VMW. Maybe done with its pullback here. What are you? Maybe, maybe not. We'll have to see. The market looks like it's trying to pull back a little bit, but they're not really quite letting it. Eli Lilly flat this morning. INS. Square looks like it's up slightly. Twitter's flat. Team basically flat. Let's see how you're holding up. Pretty well. Earnings today, after market. So I would say take your positions or forever hold your peace. I'd prefer you ever hold your peace. It's always dangerous to enter on earnings, although we have seen some pretty good earnings, not announcements, not results, but reactions. That's what I meant to say. We mentioned JPM actually missing the other day and going up. Right there, missed earnings by about 10%, which is pretty handy. Pretty handily missing earnings, and they went up. So that's a good thing so far. Obviously, it was just a couple of days ago, but we can take, give it a thumbs up in terms of reaction on earnings. We talked about how when the market is news-driven, it's not a healthy market. And so far, it looks like we've been ignoring some news, which is good. INSG down a little bit this morning. I mean, it makes sense. It's up a lot, 50% in a couple of weeks, 2-3 weeks, whatever it is. Let's see how it works today. ASEA red. Yeah, don't be, I don't know. I'm more encouraged by the daily chart than I am the 5-minute chart. Look at the daily chart. So far, nothing to be concerned about. So until it starts breaking stuff on my daily chart, I'm not really concerned. I do have my 5-minute chart up. Sorry, I'm wrapped in cords. I do have my 5-minute chart up, but I just like to see where the volume comes in. That's about it. I really try not to focus too much on this chart, but I do have it up. And when you see a red consists of mostly sub 1%. So here's my red list. And there's 1%. Look, I'm already at the bottom. So only the very bottom takes up 1%. The very bottom, ACB down 8. I don't really care much about ACB right now. FFIV, something I'd prefer not to be down. Looks like it has earnings coming up in a couple of days. The 23rd, a week. CGC down 3%. Another MJ stock. Pulling back, but yeah, not bad. Look, it's had a huge run. I don't mind it coming back 3%. MGB, a potential leader. Doesn't look like it's leading, however. Weibo down. Solar Fund down. Cron still maintaining elevated levels. Haven't completely broken down from this larger. I'm not sure if it's a valid pattern. 1, 2, 3, 4, 5, 6. Yeah, well, maybe considered a valid pattern. This would be a 6-week cup, and we entered the handle this week. So if we close red on the week, this 1, 2, 3, 4, 5, 6, 7 next week would make it a valid cup with handle, cup and handle, however you want to approach that. And look at that, we already came right back a little bit. I mean, the market's got more bullish right now than bearish. Ever since we had this follow-through day, it's been just a sea of green and some muted red. So we'll see how we end up today. But yesterday, I wasn't even quite a distribution day. Let's see what IBD has it as. I haven't been on IBD yet. My computer is laggy, man. I just gotta say, it's annoying. Must have some crazy virus. 50% CPU, 30% disk, 92% memory. I'm just going to close down WebStorm. I was going to do some work, but I'll do it later. See, out of memory. Oh, well, go away then. I don't want background running tasks. You're my frickin' IDE. I just want you to IDE. Maybe that'll help. A little bit. You know what I'm going to do? Let me, I don't know. We'll see if that helps. Anyway, market not doing bad here. I'm not mad at this day. We need some red days, believe it or not. You're going to get them. They've got to be here. Hacking Monero on it could be. If you tell me what to look for, I'll look for it. But my free antivirus, because I'm too cheap to buy a real one, doesn't find anything when I do virus scans. It's just my memory's taken up by Chrome a bunch. And if I go into the Chrome memory tool, it's mostly TradingView. And Google Keep uses a tremendous amount of memory for some reason. I have no idea why, but it uses a ton of memory. And just everything's slow to respond, just annoying. And I got a good computer too. Anyway, you weren't supposed to see that. Not that it matters. Yeah, I'm using 1.5 gigs on each of my TradingView tabs, so I'm just going to go ahead and kill both of those. That'll help me a bunch. 3 gigs of memory from TradingView. Google keeps using 300K. I don't have near 300K on it's ridiculous. Anyway. All right, so still not much red on my screen. That's good. Apple down 1%. Let's see what Apple's doing. Having kind of a mini pause down here. Volume's a little light. We're not getting a lot of accumulation on the right side here. I'm not super enthused about that. Maybe they're waiting for actual earnings to come out on the 29th, which is in about a week and a half. Quite a bit more green on my screen. If you see now, it's all green. Before it was green to about here, and that's been steadily increasing, which is healthy. VMW, Paycom, Chegg, Goose, Ahmed, INS, Lily up here, Square up here, Twitter up here, Square and Twitter up higher. So Square's been in this little flag pattern. This is a very bullish pattern. This should break out. I say should because it should. And we got NASDAQ already making us flat. And there's our first green prints of the day. Right there. We'll see if this holds up. Twitter down 1.32. It as well, forming a nice little flag here. So some bullish price behavior in some leading tech stocks. I think Square is a good one personally. I do have a position in it. I don't think it should be down that far. NVCR, Novacure lately. No, we have not. I don't think it's been on our list. Definitely has had some good bullish reactions. You have earnings are far away. Kind of had a little mini inverted head and shoulders. Mechanism of what? Is this the same Novacure I hear on the radio all the time? They kill cancer with electricity. Is that what they do? Natural electric properties of dividing cancer cells. So they just rip them apart? That's cool. Okay, don't do that by my junk. When I get junk cancer, do it the normal way. Just saying. Huh. Interesting. So they repel and attract cancer, specifically cancer cells with electric fields, and just looks like move them to death until they die. If they can do that, that's pretty dope. That is pretty good. So let's look at the weekly. 5 to 50 over the course of about 2 years, just under 2 years. Let's go look at what IBD has to say about NVCR. And if I learn to type, I'll actually get to see the results. 83 composite rating, ranked 32 in its industry group. What it does is develops novel therapy for the treatment of solid tumor cancers, including glioblastoma brain cancer. Okay, there's got to be some money in that. Hospitals will like using that. Don't have to cut open a patient. EPS rating is only 22. Zero earnings, it looks like. Negative 13 last quarter. Oh, okay, got them around 17. Nice. Good job. Not a whole lot of positive in terms of IBD traditional rankings. 4.2 billion market capitalization. No funds, no increase in funds owning the stock. Although we do have some nice increasing volume on the right side. That could change that when they up, because most funds only update their stuff quarterly. So we only see updates basically quarterly. So the technology is intriguing. I think they're probably preparing to be profitable. I don't know. I'm just taking a wild guess here, but it's intriguing. Yeah, I definitely like the price action on the right side of this chart. That's definitely intriguing. Looks like we got joined a little bit by some more friends here on my green chart. Square is leading in terms of what I have highlighted here in this deeper green. Square, Twitter, Eli Lilly. That was about to break out. Looks like we didn't talk much about Eli Lilly yesterday. Someone asked if Eli Lilly was a buy. It's not a buy yet. We still have declining volume. We're going higher in declining volume. You need to see it break the breakout point on higher volume. Otherwise, we could drift lower down here. We tried to break out here. You see there was a high volume bar right there. It tried to break out, and then it just failed immediately. Also, we were deep in a bear market, but still well above the 200-day moving average. Lilly's been extraordinarily strong. As a matter of fact, I should run a situation on Lilly real quick. Yeah, market's looking good this morning. Oh, okay. So it works? That's good. It's good when things work. So 120 is your breakout point, and that will give you 24 for 20%. So 144 is your price target for a 20% move. The reason I say 20% is that's Between 20 and 25%, that's the average that IBD says that stocks typically go up before they base. And wow, that looks really good. Super duper good. If we get a run out of it, that's the that's the main thing there. That's still pretty good. 120. What did I say? 144. It's pretty much got to get to 144 for me, doesn't it? Okay, so let's do. That looks really good. I have no tissues this morning. Lovely. Anyway, I'll get to that in a little bit. Yeah, Twitter, Square doing good. Signature Bank in New York popped up. Not much. Let's see what else IBD has to say this morning. $11 new stocks are added to IBD's hottest watch lists. That's good. Let's go take a look at those. If you guys already don't subscribe to IBD, you should. I wish I had an affiliate link. They won't give me one. Ameritrade, United Health. Okay. Paycom. We already know about Paycom. And Edward Life Sciences, we're kind of on top of that a little bit. Looked at that yesterday. Workday, I think I have Workday, but it's I don't think we've seen it in a while. Look at that, bouncing off the 50 back in December. That is beautiful. Is that an actual 1, 2, 3, 4, 5, 6, 7? I think this may be an actual cup with handle. In Workday, so your buy point here is over 170. So that's good. So 170 times 2 is 34. So it'll be 204. Let's call that 200. Wow. Look at all the green piling up this morning on the NQ on my 5-minute chart there. Lilly? We just looked at Lilly. What about Lilly? Oh, yeah, LLY, yeah. Well, of course it looks good. I think it looks great. What do you think, Justin? I think, yeah, you asked that late yesterday, right? So here's what makes Lilly look good. I mean, it's been very tight. This is your bear market started essentially here, and it's kind of actually been moving higher. Let me go to IBD. Sorry, my voice is kind of giving out a little bit. 97 composite rating, 96 relative strength rating. It's a leader. 100-something billion market cap stock that they didn't sell. They sold everything but this and a few pointed others. $123 billion market cap. EPS 32% growth rate. Yeah, sales are a little slow. Maybe that's why it's not running. I mean, everything else is pretty good. So 1, 2, 3, 4, 5, 6 red, 7, 8 red dots. That's actually don't buy zone. But it's not a buy now. It's a buy when it finally breaks over something. All right. Have a look at IBD. Yeah, IBD is a excellent resource. It's if you want data on stocks, it's the best resource in my opinion. It's priced reasonably. Everybody should have it. Literally everyone should have IBD and make them a very wealthy company so they can do more stuff. Twitter at 1% now. Signature Bank in New York, which we were looking at. Square up 2.6%. Are we breaking out of that little pattern right there? That's pretty good. We're trying to get there. We're trying to break out. I don't know if we don't have a ton of volume so far on Square. That's not bad. You have a couple of spiky candles, more than we typically get. So it's doing good. It's trying to break out. So it's trying to take out yesterday's high, and the previous day's high is a little higher than that. So it's getting on with the program. This will take it over the 50-day if it can have a nice like 5-6% day. Look at how beautiful that would make that chart look right above the 50-day moving average. That would be great. We'll see if it can happen. We shall see. All right, what else is working? What are you guys looking at? Has Netflix had a down day yet this year? Oh, two down days, yesterday and today. Cool. Have more of those. Have some more red days, Netflix. You need to form a base. Looks like earnings today. After market, we'll see how Netflix does. Let's take a look at some other ones. We'll look at Apple, which we know has kind of been hanging out down here. Does have earnings coming up. Amazon has already bounced back tremendously. Yeah, I think Amazon's a great longer-term hold. I met with a very successful money manager, well, successful at least in terms of him making fees. I think he outperforms the S&P. I didn't quite get that much out of him. But he says the best hold for the next 20 years is Amazon. And I can't argue with him too much on that. Let's look at NVIDIA. Some of the big stocks that were up there. NVIDIA, AMD, Intel. What else can we look at? Kind of big. Microsoft. Microsoft looks like Amazon. Looks pretty good. Not completely out of the woods yet. We have broken some 50-day moving averages, but that situation can change. Although we appear to be fairly healthy in our market status right now. So I'm not sure if I'm looking for things to fall apart. As ExxonMobil doesn't look nearly as healthy. Probably not boding as well for the indexes. Square up 3% now. Looks like it's going for it. Going for the highs of that little consolidation. Yep, we got it. We got it, and volume is not looking bad. Volume's not looking bad. Square could start rocking here. Twitter, that's not Twitter. Of course you move the second I hover over it. Again, Twitter in a similar consolidation, not looking bad. Declining volume on the red candles, which is nice. We had a little increasing volume on that one, which is nice as well, so looks good. Tesla, haven't looked at Tesla. Tesla's still remained choppy. It hasn't been trending nearly as well, but if you notice, those huge volume spikes have gone away for the most part. Remember all this garbage action that was just all over the place? It's actually quieted down significantly. and that's good. That's actually healthy. That means that a lot of the riffraff have stopped. I mean, think about it. When Tesla said they were profitable, it quieted the whole room. There's the room, and there's your quiet action. So everyone, I think, is trying to find a way to get into Tesla if they want to get into Tesla, and there hasn't been too many sellers. This was the last stage of the bear market, and our follow through days, wherever it was, looks like 3 days into the year. So right there was our follow through day on Tesla. Since then, we've been pretty tight action, low volume. So they're looking to accumulate. They're not looking to sell this name, and Tesla does look very good, especially for longer term prospects. I mean, you can't get too mad at Tesla over the next couple of years. Oh yeah, they had their price cut, which caused that gap down. Looks like they even came back from that. So Tesla looking pretty good. But we have a healthy market again. We're kind of it seems a little early to say that, blanket out. It's always hard to say here's the line for the bear, here's the line for the healthy market. But the follow through day kind of gives us that line. And that's its whole purpose, is to say this is where we're most likely healthy again. And with the vast majority of leading stocks acting better, this follow through day looks a little more legitimate than these other two did. If you remember, on these other two follow through days, I kept looking for stuff to buy. I really couldn't find anything. Oh, Facebook. Yeah, I was interested in Facebook. This follow through day didn't find a lot to buy on the follow through day, but INSG did work before the follow through day broke out, which is always healthy to have one or two stocks breaking out before. And then since, we've had a couple of stocks also have good behaviors and setting up better. So I think it's a while before we're out of lows, but I think our market behavior is much improved. So I was actually listening to NPR last night, and they had, I don't know what show I was watching on NPR. They got various shows. My local station is a jazz station that does NPR, and they have local news, and they have BBC America. It's kind of weird. I don't know how the whole mishmash of programs gets into my local station, but they were talking about Facebook and how by 2020, 70% of the revenue will come from Instagram. So you're going to have the old fogies like me on Facebook, and you're going to have the young fogies on Instagram, and Facebook owns both of those. So I actually do kind of think for the longer term, Facebook probably is a pretty good investment. They kind of have cornered the market, if you will, on social media. You've got Snapchat, which really hasn't figured out how to monetize yet. You have Twitter, which is doing okay. Hold on a second. But yeah, so Facebook here there's a good potential here that Facebook could have some good games longer term. Shorter term, it's hard to say exactly where it's going to go. A little difficult to ascertain that. The price action here is a little bit all over the place. There's no chart pattern to buy off of. You could call this a double bottom, I guess, but this is a big leg down. And if that is the case, if you do want to call this a double bottom, your buy point has already been exceeded right there. So the low of this morning, that's about your buy point, 146.5. Still within buy range if you want to consider that a double bottom, but this would be the most abnormal shaped double bottom I've ever seen in my life. Like super long arms, mini body. But yeah, no, I'm not really mad at Facebook, especially for longer term holds. Owning Instagram is a pretty good asset, you have to admit. That's a pretty good one. Kids coming back, hold on. Okay, I'm back. Google and Amazon as longer term buys. Yeah, they're all leaders in what they do. I mean, really, they are. You can't argue with that. I think Tesla and Facebook will. I think they'll get you the better returns. Facebook's a really big company. The heck is that? I have something weird happening. The hell is this? Don't browse. I'm very confused. So if you go look at stocks by market cap, you ideally don't want to own the largest market cap stocks, which really sucks because Facebook is one of them. Reason being is it generally, I'm not saying don't buy Facebook. That's actually, I don't believe that you should not buy Facebook due to its market cap. It's number 8, ranked 425 billion. But in order for it to get up towards the mega caps, right now 831, Amazon is leading the pack in terms of market cap. So here I'll show you. I'll share my screen with you here. So there's the market cap value. Here's the ticker symbol. So Facebook being number 8, I think there's definitely impetus for it to go higher. The question is, are people going to scoff at the market cap as it gets higher? Versus if you have a lower market cap company, no one really cares. But once the headline starts hitting Facebook, it may cause a run on price where people try to get in on the hottest stock, or it may cause the opposite, where people try to get out thinking there's too much risk and its run is over. That may be part of what happened to Apple as it crossed $1 trillion plus, and Amazon as it crossed $1 trillion plus. There was maybe a mini run on the market just to get out of those names because they've gone up so far. No one had ever seen a $1 trillion market cap company before. Same thing kind of happened when Dow first hit 10,000. You hit those really big numbers, and I think there's a flight to take profits by some of the big names. Just a thought I've had. There's nothing technical regarding that, but just psychologically, I think, oh, Apple's $1 trillion, I should sell it. That's a lot. It just passes the quick sniff test, if you will. But still, I think that impetus with Facebook being 425 million, even if it doubles to 850, which would put it, at the time, if the market's rallying and Facebook's rallying, these will be rallying as well. It'll put it in line. So I don't think buying Facebook is bad. Microsoft at 815. Google at 736. See, Google's been interesting. It rallies, but it takes a while to have those good moves. But I think all are good longer term holds. And I think if you want a mixture in your portfolio, you should find those longer term holds with growth prospects, kind of similar to like what Apple's done over the past couple of years. I mean, because if you look at now, granted, it's all the way back down here now, but if you look at Apple over the past few years, once it broke out of that 2015, 2016 base, right here, it had a good rally. The PE ratio was manageable the entire time. The growth rate of 30% was great, still better than most, I think. And Tesla with a market cap, I think, like 25 billion or something like that. What's it at these days? I mean, maybe it's 50 billion, I forget. 60 billion. I think Tesla could 10x before it gets to Facebook's stature, give or take. Tesla could have massive runs, as long as their car, as long as fundamentally they're sound. Their cars do well. They're probably going to come out with more products. They're making their 3rd gigafactory. These guys are starting to ramp up and starting to look like a more mature company, and I think that may be what some of the analysts are missing. Is that, yes, their valuation is pricey, but it does form these multi-year bases. You look at this 3-year base here. It's in year 2 of maybe another 3 years base. Who knows how long this base is going to take before it takes another leg higher. And then as it scales, it should be able to scale that profitability and scale the rest of that as it comes out with the Semi and the cheaper Model 3 and the subsequent SUV version of the Model 3, which I believe they're working on too. So I think Tesla probably has a lot more upside than a lot of those other names. It's 60 billion versus 400 billion. You can see that institutions will likely be able to get a good share of Tesla while at the same time having a good amount of Tesla. They'll buy Facebook for some growth. They'll buy Amazon, Netflix for some growth, but they'll have a lot of stability in that name, implying lack of volatility, which means you're not making as much money. So that's kind of a general theory of trying to find low-ish market cap names because they can have a potential much further upside. There's a lot more runway ahead of them. You know, if you're at a top national airport, you know, and you want to go fast flying, you can jump on a single jet prop, which will take off fine off the runway. You can jump into a fighter jet, which will take off fine off the runway, or you can jump in those huge Russian cargo jets, which may not make it off the runway. So anyway, those really mega cap names, while they're good and they do provide stability, may not give you growth if you're looking for growth. So anyway, you just play it by ear. MMNFF, what do we got here today? AMRN. Remember this guy from way back, this massive run, that huge gap, and it just kept going. We had this trend line as our resistance point, and then it fell back through it. That was a pretty clear sell signal. And now we're kind of coming back a little bit here. Good volume there. Maybe the start of the run after the breakout. So here's the start of the run. This is a pause after the breakout of this trend line. That could work out. And things pulling back a little bit. Twitter pulling back slightly this morning. Still within the base. Hasn't quite broken out. I think Square is probably back within the base. No, still holding so far out of the base, which is nice. Look at the volume on my 5-minute chart. Definitely healthier than early yesterday and a couple days before. Ideally, this will maintain higher levels. We don't need it to rocket. We just need it to you know, show some movement, and I think that would be great. So I'm going to be hawking the Eli Lilly trade. Going to be trying to set that up, I think. Paycom. I think Paycom is a pretty good value. I think I've already run the numbers on Paycom, and it's probably not a trade for me with my option strategy. But if you're just buying stock, I think Paycom could be good. It does have earnings coming up, so be wary of that. Always be wary when earnings come up because you cannot know the reaction. You literally can't know. All the best traders in the world that I'm aware of only hold through earnings if they have a massive profit. Like if you've got a 20% plus profit, then you can hold through earnings because even if it drops 15%, you're at least not going to lose money. So the whole point is to not lose money. Well, I think I'm going to get out of here, guys, unless you have any more questions. I'm going to bounce. We got a pretty nice neutral market day, which is good. Not quite taken out the 50-day yet. We're above it, but we haven't completely broken through it. We still could fail. This could still just be pops above the 50-day, and we'll have to see how that works out and how that plays out. I was looking at Match.com for a minute yesterday. Didn't line up any numbers on it, but it was coming back pretty nicely. So Match.com was one we haven't seen in a while. What else? I think that's it. Don't see any more questions, guys. So I'm gonna get out of here. Have a good day, guys. Thanks for joining me. See you tomorrow.